All right, everyone, welcome to another Profit Strategies podcast. We are entering the Christmas holiday, and with me is dear old Saint Chris.
Ho, ho, ho.
Hey, Chris, we missed you last week. I had some stand-in.
Yeah.
They did a pretty good job, though. I got to tell you, my stand-ins did well. So, hey, let's break this down into a couple different segments. We'll start off by talking about what's happened in the markets. This week, it's been all about the stimulus, which we already knew was coming anyway. But your thoughts?
You know what? I think it's turned into a little bit of a sell the news situation here, Tom. Everybody's been ramped up looking at it. If you look at the prices in silver and some of these mining companies, they were buying them ahead of yesterday. And let's call it just unimpressed. You know, everybody's kind of looking at all of our lawmakers and saying, why didn't you do this 2 or 3 months ago? But I'm glad it's done. I think that you're going to see some more action in early in January in terms of getting another round of stimulus out there. So I think that's what the market will look at next.
Do you know one of the biggest stocks that made a move when the stimulus was announced the following day was GameStop?
Go figure.
GameStop, not because of the Christmas holiday. I mean, you know, GameStop should have been running up well before this news came out. But I guess it's just more money now in the hands of a lot of people who, let's face it, they really weren't working that hard to begin with. You know, and now they're working on their index fingers and their thumbs.
Hey, that's an important calisthenic. Yeah.
GameStop had a big day on Tuesday, the day that following that vote.
Yeah, 22,
I thought that was quite interesting.
Yeah, well,
yeah, so
the other stocks that I always watch in these situations are companies like Best Buy. You know, somebody who sells TVs and they're not up as large as GameStop. They didn't even make it up 1%. But you're right. I mean, look at these companies that are discretionary income type of companies, because I think that's the way people view these checks. It's just discretionary income, Tom.
Yeah, I mean, you know what, and I don't want to, you know, I don't want us being, you know, patting ourselves on the back or anything here, but we did say that the Christmas shopping season was going to come early and end early, and that it did. And we did say that that this was going to be a sell the news event, and it is. In fact, if anything, the market has just had a really hard time getting above and staying above 370 for the SPY. We are really tapping out there. And I got to wonder, what is the government going to do next?
I don't have the answer to that question. I don't want to be in their shoes. I think that you're going to see it at some point. Let me ask you this. Do you ever watch Shark Tank?
All the time.
Okay, so the cubes.
Time.
I think you have to point out that the cubes is probably the sharpest one in the knife box there. I mean, he's always got a great idea, and he's also friendly. I heard a podcast.
Well, he's the one that says the least, and you know, I mean, that means he's listening with both ears.
Correct,
and when you gotta love that.
Yeah, and when he says something, you listen to what he says. I heard a really interesting podcast with him a month or two ago where he talked about it'd be a great idea for the next round of stimulus, instead of sending checks to everybody, sending these EBT cards out to everyone and setting up a program where you instead tried to stimulate local businesses and said, here, every week we're going to give you $200. And spend it on your local businesses. And his idea was, let's put the green roots in communities instead of having them go to GameStop and the big box stores. And let's try to get it down at a grassroots effort if we're going to spend this money. And I think that's what the government needs to start focusing on, trying to get this into the small businesses, and let's get the country growing, because that'll, you know, the old Reagan trickle down economy or economics. I think that would trickle up at that point.
As far as checks are concerned, and don't quote me on this, because this was table talk at dinner last night, but I believe it was less than 20% of the $900 billion stimulus package actually is going out in the form of checks to people.
When you look at the end result of what makes its way through both chambers of Congress, you find that I think, you know, the we think it's a lot of it is in the form of stimulus to us. That's not the case. It's still a lot of projects that are getting funded, and I don't know. As
Yeah.
I said,
Well, I mean, I have to, I look at things, try to look at everything as an investor. And this money is being invested back into my community and your community. But you know what? Only less than 20% of it's being invested back into my community and your community, but I'm paying 100% of my taxes, for that case. So I like to kind of see as much of a return in these areas as possible. I'm happy to pay taxes. Lord knows I pay my fair share. But I also, I want to hold accountable that money it goes where it needs to go, and not just a small portion of it, where the large portion goes into areas that are to me unknown. All right,
yeah,
so I'm getting off on the wrong foot now, getting back to how we benefit from this. So I really do I look at the stock market. It really just looks like it's waiting for the right, or will we call it the wrong, news to come out to push this thing lower. If you take a look at bonds, they've been consolidating. They're looking for a reason to go higher, and I think a break above 158 on TLT is going to be a big thing. The U.S. dollar has finally gained some steam after going down to new lows for the year. That was last week. We've seen a push up, and not only we saw a push up Monday, we saw a push up Tuesday. We're still. I mean, you look at UUP, it's still down in the dumps. I
right.
would say we need to get back above 25 before we start to see anything, but it's heading in a direction that doesn't bode well for the stock market. And of course, oil, which has been oil and energy, and energy. I mean,
Hmm.
you've had some great energy picks, but oil and energy has had a superior last 30 days,
Yep.
but it's run into a little bit of headway too, especially fossil fuels.
Well, you
Um,
know what? Let me throw one out there that everybody else is watching too, Tom. Tesla and Amazon. Tesla, is it a sell the news type of trade?
it is.
And Amazon,
You know,
what in the world is going on with Amazon in 3,200? You think that it's going to get married to 3,200 right now?
So I'll mention these two things because you're hitting on some stocks that I'm constantly getting in and out of.
Hmm.
I did a video last week on Tesla selling strangles. All right, if you don't know what a strangle is, folks, go check out my YouTube channel. And then earlier this week, I did a video which I called it Tesla Part Two, which was iron condors, which
Mm,
is the strangle's younger sister. All right. And meaning it was less cost, less risk, and still the same high probability, all with the same outcome that Tesla really doesn't go anywhere. And so, I'd look at that. I'm a seller of premium right now on stocks like Amazon, which are consolidating. And I've been around the 3,000 level and it's been actually very good to me between 2,900 and 3,000. But with Tesla, I've been selling both ends of that spectrum. I'm in an area where if Tesla, I was selling 800 calls, I was selling 500 puts, and I'm continuing to milk that until we get some sort of direction on where Tesla's likely to go. And yeah, I mean, it ran up to almost 700. Right at that time, the news came out that they were being included in the S&P 500, and that it was going to happen. And of course, we're getting the sell off since then. But I mean, think about it. How low does it go? For every person that says this market is overdone, and I'm one of these people, there's somebody else that says, where else are you going to put your money? Where
hmm.
else are you going to put your US dollars, which are getting more and more worthless as we speak?
Yeah. Well, you know what? You gave me a great way to segue into this question. The where else are you going to with the fiscal stimulus? Coming back to our fiscal stimulus discussion, everybody was buying silver and mining companies and gold and all of this and Bitcoin ahead of the fiscal stimulus announcement on the intent that, okay, this is just going to knock the dollar. The dollar's like a whack-a-mole game. Every time it sticks its head up, it gets hit again. And those are hedges against that. So is that what is going on? Do you think that let's say Bitcoin is going to pull back now on a sell the news because the fiscal stimulus package is out there? Or is this just going to be a little pause that refreshes and Bitcoin's off to the races again?
Could be a pause and refresh, but I look at Bitcoin two different ways. I look at it as a trader. I look at it as an investor. As an investor, I don't look at it. I'm looking at 10 years from now. Where's Bitcoin going to be? And I've got a pretty lofty target of 500,000 simply because of its finite properties. But as a trader, last week I was talking about Bitcoin and I got wiggled out of my trade, and meaning that it hit my target. My target was 22 and a half. 22,500 hit the target, and I got out at about 22.8. And then I was expecting a pullback back down to around 1920. It never happened. In fact, if anything, it wiggled back. It ran a little higher, wiggled back again, and it gave me the notion that it was time to get back in. So I literally got back into Bitcoin, the same place I got out of it. Why is that? Because it did not pull back. It consolidated right back in the level where I ended up selling it last week. So I looked at myself and said, I'm going to be kicking myself if I don't get this. So I have a plan to get some now. And if it does start to drop, I put a smaller position on. If it drops, I'm going to buy into the position, because that's my thought going into January. And I think Bitcoin's going to see it's going to see the mid to high 20s, and that's kind of what I'm setting myself up for. But that is not my buy and hold Bitcoin stash. My buy and hold Bitcoin stash I haven't touched. It's, I mine some of that. I purchased some of that, and I have no intention on selling it, for two reasons. Number one, I see it going much, much higher than it is right now. And number two, I don't even want to deal with the tax consequences, which, Chris, I want to talk about right now.
Let's do it.
Which is, a lot of people are sitting here saying, I had a good year. I don't know how, but I had a good year. My wife, she opens up her Robinhood account and she's like, can you believe? And starts to go through it. And with the rest of the family, that has smaller accounts, and they cannot believe the numbers that they're getting. 60%, 70%, 100%. My brother-in-law, I believe, had 200% returns. And so there are people out there that are looking at this, and they're looking at their accounts and they're like, wow, should I sell? If I sell, what's my tax rate going to be? And if I do sell, does it take me out of potentially more gains to come? And so, that kind of brings us to the segment we want to discuss called cutting your capital gains tax, or really being able to cut your capital gains tax. And Chris, let me mention real quick to everyone that neither you nor I are tax advisors, and that you should you should talk to your local CPA, to find out what's best for you. But a couple of things that I want to bring up is that, first of all, short-term and long-term capital gains, completely different. All right. Short-term gains are applied to an asset that you've held for less than a year. You're going to pay the same rate you would as your ordinary income taxes. Long-term capital gains tax are to assets held for more than a year. And then what's going to happen is your capital gains rate is going to be either 0%, 15%, or 20%, depending on your income. All right. So one way to have zero capital gains, long-term capital gains, is if you make less than $40,000 a year. All right. If you're single, 80,000 if you're married. All right. So, but one of the things that we don't talk about here, Chris, is how to make less money.
Right.
Is that right?
Yeah. Ironically, Tom, I'll interject. That is my CPA's advice to me when I start complaining about capital gains taxes. Just make less. So.
Yeah, you know what? I get the same kind of thing too. Is that when I'm paying taxes, my accountant says, "Hey, be happy that you're paying this much in tax, because that means you had a good year." And so we won't say, stop making money so that you can have 0% capital gains. That's just dumb. But Yeah, at the 15% rate. This is where a lot of people, most people that I know, are going to fall in. Is if you're in between 40,000 to $441,450, and you're single, you're paying the 15% capital gains rate. If you're over 441,450, you're paying 20%. Right? So there's a big hurdle there in terms of income. And again, check with your accountant, see where you fall. So that's that sets the bar right there. So how do we lower that number? And Chris, you said it at even before we began, and we were kind of discussing what we're going to talk about today. You said something called tax loss harvesting. You want to explain exactly what that is?
Well, that is going through and looking at those positions that are at losses. And I always ask myself, Tom, two questions. First of all, A, is it at a loss? That's in that flow chart diagram that you look at when you're tax loss harvesting. Is the position at a loss? I always ask a second follow up question to that, which is, do I want to hold this in hopes that it's going to turn into, or do I have a reason to hold this because it's going to turn into a gain? And if the answer to that second question is no, I can sell that position. I can divorce it, as I call, because my long term positions, and we're talking about long term positions here, you can do it with some short term, but those longer term positions, you can take that loss and actually balance it out against some of your profits. Now, there's some ticky tack stuff you have to make sure that you've done. You've got your cost basis correct. How long have you held the shares, et cetera, et cetera. But that second question is the key one for me, Tom. Is am I holding shares of Microsoft at a loss? And you wouldn't be, but if am I holding them at a loss? But I really don't want to let go of the stock. And if I can't answer that second one decisively as a yes, then I move on. But it's as easy as that, if you will, offsetting those, taking those losses in one stock to offset the gains in another.
Right, and this is something that may not even apply. This can apply outside of the stock market too. If it's a private investment
Yep.
that you've held for a certain amount of time that just hasn't panned out for one reason or another, that can be applied against your capital gains as well. And I said it once, I said it twice, I'll say it one more time, and that is check with your accountant or CPA and see what best fits your plan, but make sure you ask him at least. Hey, can I take advantage of tax loss harvesting and put it against some things that I want to sell simply because they've just ran up so much this year and I need to rebalance. That may be the conversation that you want to have. All right, Chris. As we end, I want to ask you, what do you have on your radar that you see potentially popping up or popping down between now and after January 1st?
After January 1st, I'm looking at, I think that we've run our course on large cap tech. If you look at the NASDAQ 100, Tom, I'm trying to, if you will, move away from that as an index that I've been trading either the index itself or stocks in. Your companies like Tesla, your Amazon, those companies they've got the whole weight of the market on their shoulders in 2020. I mean, they really pulled us out of a rough year and they turned things around. And now people are moving away from those. Interestingly enough, one of the sectors I don't like, but I'm being forced to like right now, are the banks. And you mentioned it. Interest rates are coming up. We're seeing the dollar get a little bit of strength here. If that trend continues, that favors the banks. Banks are going to be the first group to report in January. I think you get a pop out of those companies, and they've been strong the last month or so. And let me reiterate, I don't like bank stocks as a general rule. So that's a little out of the box. And then the third thing I'd say are these alternative energy names that you and I have been talking about. When I look at companies like Sunrun, like Solar Edge, I mean, these are companies in the last 3 days or 4 or 5 trading days, Tom, they're up 20, 30%. Remember, you have an administration that's going to take over on January 20th, and they're going to be very clean energy friendly. And you nailed it. The oil and oil service stocks have been on a great run. I think you're going to see a rotation out of those companies into these clean energies, and the clean energy stocks are already on a run. Do not miss out on those. And an interesting thing,
Okay,
if I can throw in one little kicker,
absolutely.
ExxonMobil now has a couple of hedge funds that are getting involved in a proxy battle against the board. They want to put their own slate in. Guess why?
Oh,
It's not because
why
of
is
the
that?
dividend. It's because they want to see ExxonMobil shift to a clean energy company.
Oh, yeah.
So I don't think you need this any more signal than that to say, keep looking at these solar stocks. I love the TAN ETF, TAN. It's a solar ETF. My gosh, that is going to be one that flies high next year.
Nice. And if I were to throw a couple of stocks in the ring between now and when we reconvene in the first week of January, well, first of all, disappointment. A disappointment would be Pfizer. You
Hmm.
know, I expected Pfizer to do a lot better than it did. In fact, I have probably put 3 trades on Pfizer in the last month since the news came out. One was a winner, one was a loser, and one's still open right now. So I'm kind of I'm right down the middle with that third one. That's going to really kind of dictate whether or not it ends up being a winning combination. But getting outside of the pharmaceutical index, because the vaccine is, it's all front and center. That's the news. That's the narrative right now that mainstream's pushing. Here's an area that I like going into the holidays. While most stocks, I believe, have already seen their holiday buys, and that would include not only the FANG stocks, but going into retail. There's one that I think is playing catch up right now, and it's going to run bullish in through the holidays, and that's Netflix. And the
Yeah.
reason I believe Netflix is going to be a bull is because Netflix gets most of its viewership during the holidays when businesses are down and everyone's taking a break and they have nothing else to do. So I think there's going to be a lot of binge watching on Netflix over the next couple weeks. I know my household is going to be a big part of that. And therefore, Netflix is my stock of choice going through the holidays. If there were one more I were going to look at coming out of the holidays into January, I would have to say the home building that's happening in Florida, and I can only speak for the state of Florida, has been unbelievable. I mean, I'm seeing traffic jams here in Florida in the Sarasota area like I've never seen before since I've lived here. And I've lived here for quite some time. Um, there are more people that are coming from New York and Chicago, and they are coming down and settling roots in Florida because they're trying to get out of the high tax states that they're in. They're trying to get out of uncertainty. They're coming to the warmer climate of Florida. Now, I have some advice for those that are coming down. Take the heat gradually because it's going to hit you hard. And then you're going to be if you get out there and you stay out there too long, you're probably going to be packing your bags and heading back north because you're not going to be able to handle the heat. You got to take it in steps. But I also want to mention that when we look at stocks that are performing because of this, Lennar, which is a home builder that their home builder, they build homes around the country, but they focus in a lot of areas that are up and coming areas because that's what new home building is about. Nobody builds new homes in areas where people aren't going to. So, where are the new homes happening right now? Well, they're happening in states like Tennessee, Texas, Florida, Arizona. I mean, all these areas where people are moving to and migrating to. And so Lennar is a big bit of that. Lennar, and I see Lennar continuing to move. They had a great earnings that came out just a week ago, and I believe into January you're going to see them to see a continued push. Now, both of these two stocks I mentioned for a reason because they're also on my money calendar, and my money calendar shows both Netflix and Lennar during these periods that go into January over the last 10 years. 90% of the time, these patterns have been to the upside. They've been on the bullish side. So I wanted to throw those out to the community as well. And so, Chris, any final words?
You know what? Only final words are going to be those sentimental ones where I just tell you and your family to have a great, great Christmas and holiday season. Be safe, Tom. Be safe and get out there and have fun I know you guys will, and you'll be responsible about it. But my goodness, for what let's just say it, a crappy year we've been through, we still get, we've got 2021 to look forward to. It's been a great 2020 for investors. I think I see it continuing, but I'm feeling pretty grateful to be in company with you and be able to talk to our people and just share, some of our experiences. So thank you for that, Tom. Just a little bit of gratitude and
Absolutely.
holiday wishes.
Absolutely, pleasure's all mine, and Merry Christmas and Happy New Year to you and your family, Chris.
Thank you.
It's funny because you were just saying it last year. My wife and I were planning our 10-year anniversary, and we did a big cruise. It was right around the Christmas holidays, and we just started hearing about this coronavirus, and of course now here we are in a completely different holiday where we're going to be doing more FaceTiming, on the big screen. So we're
Yeah.
going to have a FaceTime Christmas with the majority of our family because they live out of state, like most families don't live all in the same area. But yeah, I mean, we're going to make the most of it. That's the plan, is to be count your blessings and be happy with where we are. Where we are in life. Even though we'd love to be traveling, I would love to be out and about. And I was telling my wife just last night. I said this is so crazy. I miss going out and traveling. I miss going out and traveling with you. And she echoed the sentiments. But you know what? We're going to get through this, and this will all be in the rearview mirror sometime in the near future. We can see that. And with that, Chris, and like I said before, Merry Christmas, Happy New Year, and let me give a heartfelt Merry Christmas and Happy New Year to all of our viewers, all of our listeners, the folks that are on our podcasts. It is exciting to know that in this pandemic, in this time that we've been in for the last year, that I've had a voice, to be able to share not only our trading and investing strategy with, but in a lot of cases, everyday life. We talk about here too, Chris.
Oh yeah. Yeah. Family stories, and you know what? That's what it brings it all back to. Family, Tom. Family around the workplace, family in the home, family with listeners. I think it all is a big family. And boy, if we can help out family with our stories and our experience, that's what it is all about. Again, lots of gratitude.
Absolutely.
Yep.
Absolutely. And so, guys, as we end out our final podcast for the year, once again, I want to wish all of you Merry Christmas, Happy New Year, Happy Holidays from us to you. We hope that you make this time off something that hopefully can be memorable to you. And we will see you in the new year. New year, new strategies, new market. Same hosts. We'll see you next year, guys. Talk to you then. Bye now.